The 4-step method to high performance trading is about bulletproofing your daily routines, your executions, your skill set, your mindset, and your beliefs to execute your edge trading in live time. The 7-step daily routine for high performance traders is about developing daily routines and processes, building your headspace, your belief system, your mindset, and your daily habits to bulletproof yourself to master the markets. It's a free audio program. The links are in the description box below. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading, a short mindset reset video and technical video to highlight the importance of sticking to playbook best trading setups. And one of the things I want to point out to traders that in the playbook, I talk about things that you have to identify about yourself. The trader themselves is the only variable. Page 10 in the playbook, I talk about perceiving signals and information that I process the best, how I can easily identify a setup. Using end of day signal days, we've talked about multiple days of breakouts, singular days of breakouts, first red day, first green day, inside days, because on the higher time frame, that allows me to identify candidates that can potentially now be offering me the best odds on the day in the session that I'm trading. And we want to target markets that are potentially going to explode or move quickly. The important part is understanding also when not to trade. No edge is zero edge. Limiting your screen time so that you're targeting the highest probability times within a session, whether you're trading Asia, London, or New York, and then scaling those repeating setups up in size. My job is to identify only the best setups. That's it. Daily process. Daily process. That's just building your watch list every single day. It takes 15 minutes to skim through instruments that are potentially now offering signal days, and then whether or not they set up in your session, and then understanding the higher time frame template. Markets only do 3 things. They break out and they stay in breakout and continue to trend, or they offer breakouts and they fail in reverse. They offer reversal setups, or they stay in the trading range and they can still offer traders sell high or buy low opportunities. What I want traders to get out of this video is just the daily process. We have Wednesday, yesterday, our reset day, day 1, day 2, day 3, on the front side of the week. We're on the front side of a new month. We have day 1 on the pound New Zealand daily. It closed in breakout at the end of the month, back in the long direction. The first trading day of the month also closed in breakout. We have multiple days of breakouts. Monday, Tuesday, Wednesday is a signal day. Wednesday is a signal day. Now, I also want to point out to traders, we have a breakout day ending our month, and we just spoke about markets only do 3 things. So understanding levels of where markets are in breakout or in consolidation or in a larger box. But most importantly, we have a signal day. I can look at my basket of instruments and in a couple of minutes identify signal days on multiple instruments and their cross rate pairs. So it's a pretty simple process, and I'm only looking for a couple of signals. Put them on my watch list. But we had the inside day on the pound New Zealand. Inside day, page 69 in the playbook, false break reversal or trend trades. Now we're in a market that's already in breakout on the front side of a new month and a new week. New month, new timing cycle. How does price set up on the day? Now the most important part for traders to get in the habit of is actually understanding the opportunities, targeting the instruments that have the highest probability, setting up, but going there prepared. We talk about the 5 Ps. Proper preparation prevents poor performance. So I have an instrument on my watch list. I'm trading Asia. What do I do prior to the session? So traders need to understand, we're not trying to catch the high, catch the low. I keep repeating this to traders. Let the market set up. We have a signal day. We're in breakout already. The market only does 3 things. Prior to our New Zealand session opening up, we have our levels drawn. We can even just put a horizontal box. We're going to demonstrate the same things happening again in multiple instruments. We have a US session high that is dumped down into the close. These are all things prior to the session open that we can just be looking at. Dumping down an inside day. What happens in the session? We have an explosive breakout. We have a late Asia session parabolic pin hammer continuation. Markets only do 3 things: breakout, pull back, and continue to trend in a market that is already in breakout in the long direction. And then we have our basic model for trade entry criteria, page 29 in the playbook. And this just is simple. It's allowing traders to remove analysis paralysis. We have another pin hammer to manage our risk. And again, these are very tightly controlled risk parameters to add in if traders are already in the initial move, positioning themselves in line with the higher time frame breakout, or adding additional positions in line with that dump, coil, and pump template. Dumping down from the high of the session, coiling sideways, breakout pullback, and explosive continuation trade. Potentially targeting the high of the breakout day where higher time frame stops may be. Now gold on Tuesday gave us a signal day again, signal day. So this is after the fact. We can come to the screen at 4:59 New York time and look for markets that have given us signals. We just said markets only do three things. We have the pound New Zealand that's in breakout. It's pulled back into an inside day, and it's given us the continuation trade in Asia. We have a market that's broken out on gold. We may have a breakout that potentially fails. Now you'll notice we have a very similar dumping down into our US session peak formation low. We have a market that's coiled sideways. We can draw our lines. We have levels in place. We see the same type of behavior that we just saw in the pound New Zealand. If we blow this up a little bit and zoom in, we have a market that breaks out at the beginning of our Asia window, and we have an explosive engulfment candle and our backside opportunity in a market that is now dumping down, coiling sideways after breaking out for the potential reversal trade setup opportunity. The dump, coil, and pump on gold on Wednesday. Now another market that gave us a signal day on Tuesday's close was the NASDAQ 100. It closed in breakout. We filled the gap from last month's breakout, and Tuesday closed in breakout. New month, new timing cycle, the second day of a new trading month, and we've broke down and closed, filling the gap in breakout. For a moment here, I want traders to forget about whether or not they traded on Monday or Tuesday. We had a signal day. The market closed in breakout. Closed in breakout on Tuesday, filling the gap. We can recognize, even without putting major round numbers on this chart, we have day 1, day 2, and day 3. We now can look at this and clearly see 3 levels of drop. I want traders to think really simple. The first day we talk about prices in a box. That's our opening range, beginning of a new month. Prices in a box, level 1. We break out, we pull back, and we continue in our downward breakout. Markets only do 3 things. New York session high, drag across. That's our second level. And we break down into Wednesday, day 3, and now that's the bottom of our box. Now we have our gap level we can project across. We keep saying that markets only do 3 things. We have a market that's broken down in Asia, so we have signals on the day, a market continuing in breakout. So we closed in breakout, it's broken down again. How does price set up into our timing window? Now we went over the Asia session reversal yesterday's video. Again, just a simple process. Breakout timing window, pin hammer for the explosive reversal back into breakout traders. Signal day, remember market closed in breakout. They only do 3 things. Keep everything simple. Don't overcomplicate it with a bunch of crazy stuff. Market dumped down. It coiled sideways into our timing window. The same pattern that we just looked at on the pound New Zealand and on gold. A little W, a little double bottom, and our pin hammer. And we can put our basic model for trade entry criteria on here. This was an Asia session reversal setup opportunity. Simple, repeatable, scalable. We've just seen it on 3 instruments now. But we use the same process. We just talked about dump, coil, and pump. We have a market where the breakout has potentially failed, but then it starts to break down again. We can draw our 2 blue lines prior to our New York session 9:30 open. And we have a market that's now breaking higher above closing price. Above closing price. Higher highs, thesis in place. We draw our 2 blue lines prior to our session. We have the low of day level that's already in place. We have our timing window, but then most importantly, we talk about letting the market set up. Now, the hardest part for most traders is that they want to get in right away. They're trying to figure out how to get in at the open. And I keep saying to traders, sit on your hands and wait. We talk about my friend Steven. He only trades reversals not until the third hour. We've talked about 9:45 on is the third hour. And that's because we can have explosive movement on the open. We have our thesis in place, dumping down, trapping volume. And I want you to think simple. We're underneath of closing price at the open. We have our thesis in place. They're putting a peak formation in place and they're going back down into it. We have our engulfment for the explosive reversal setup. The dump, coil, and pump on the smaller time frame and the dump, coil, and pump on the higher time frame. We've dumped down day 1, day 2, closing and breakout. Day 3, reversing in Asia, pumping higher just prior to our New York Open above closing price. Wednesday, day 3, there are only 2 types of trade setup opportunities. We go back to our higher time frame and we can project levels across, if we just zoom in here, as take profit levels. We may get up into this higher time frame selling and this market may exhaust. In this particular case, we didn't take out the high, but as we get closer to the end of the day, we can lock in the money. I talk about taking measured range expansions as potential profit targets. We have the high of that consolidation, the low of day level, locking in the bulk of the money and leaving a trailer because I want to get paid. Keeping things simple. This is just a box. Consolidation. We went above closing price. We're dumping down. Explosive reversal. 15 minutes after the open. We're looking for 2 types of setups if the setup presents. Buy low or sell high. Same thing over and over and over again. The only variable is the trader. So we have our setup in place, execute the trade, lock in the money, and walk away. Signal days. The only variable is the trader. So I'll just close on this. Stick to signal days. Stick to simple rinse and repeat setups. There's only 2, a buy setup or a sell setup. Don't diddle in the middle. Leave that for the experts. Work from the levels using signal days, timings, levels, behavior of price, behavior of the trader. Keep everything simple, traders. Simple, repeatable, and scalable. Have a great day, traders, and may the markets go with you.